Earlier this morning, Bitcoin touched a 13-month high following comments from BlackRock CEO Larry Fink on the firm's application for a spot Bitcoin ETF. Specifically, Bitcoin climbed to around $31,450, but gave back those gains after better-than-expected jobs data increased investor concerns around the path of interest rates.
Markets have advanced significantly since the Fed started raising interest rates, and so I'm wondering, what have we seen now the cracks of this starting to appear in terms of the whole, ending in tears?
Bitcoin is still stuck in a narrow range between 30,000 and 31,000. Which way will it go? Well, if it drops below 30,000 and closes there, it could be bad news. Now, here's the burning question. Which direction will the market choose? So what's going to happen? What should investors look for? Well, in today's video, Gareth Soloway is going to dive into some exciting calculations and analysis for Bitcoin and the stock market. For more details, be sure to stay until the end of the video. And if you want to stay up to date with the latest crypto insights, the markets and the economy, be sure to hit that subscribe button and the bell icon. Okay, are you ready? Let's get into it. But before we dive into the details, we have some exciting news for you. This week, we'll be doing a free live Q&A with Samuel Plesnik, our master trading coach. He'll be answering all your burning questions about crypto, trading, and investing. Here's a message from him.
My name is Samuel Plesnik. I've been managing 2 crypto funds, and I've been also a market maker in top 10 crypto exchange. I would love to invite you to our special Q&A session with me, which is going to be Thursday, July 20th at 11 a.m. Eastern Standard Time. I will be sharing my strategies there. I will be sharing there what does it take to become a successful full-time trader. And I will be also answering your questions that you might have about trading. Click on the link below. Join me on our Q&A session on Thursday. So looking forward to talking to you. Ciao.
These calculations and figuring this out go to charting and go to many, many technical things. And the level I've always said is 30,500. That's the key level. You have to have 5 trading day closes above that level in consecutive days. And if you look here, we've even pierced 31,000 multiple times, yet we have not had 5 consecutive days above 30,500. So that continues to be the line in the sand. And you're right. This is what we were talking about a month or so ago when we last talked, and we still have not been able to do it. So for me, I'm looking at this 30,000 low where we've been going sideways now for about 2 to 3 weeks, and the $31,000 high. And we're basically staying within this range, $1,000 range. And I'm looking to see which way does it break. If we break below 30,000 on a daily closing basis, I think the market could be in trouble for Bitcoin. We could see a drop down to, let's say, 26,000 or 28,000. If we can break above 31 and again, hold above 30,500 for 5 consecutive days, you should head to about 35,000 on Bitcoin.
Bitcoin prices remain stable above $30,000 as investors exercise caution amid mixed market sentiment. On the daily chart, the price of Bitcoin has been testing the 30k level multiple times after breaking above it recently. Although this level has provided support so far, there are concerning signs of a bearish divergence in the RSI indicator. Now, you see, 30,500 is the magic number that Bitcoin needs to cross and stay above for 5 days in a row. Why is this level so important, you ask? Well, it's all about validation and breakthroughs. If we can break above 31,000 and sustain 5 consecutive days with a close above 30,500, so keep a close eye on these levels, watch the market's every move, and get ready for some thrilling action ahead.
So the level goes all the way back here, right? So you have to go back all the way to the cycle, the bear market or the bull market cycle of 2021, and it's connecting as many pivot points to the daily closes as possible. And again, that's what the line kind of comes out to be. So right at that 30,500 on a closing basis for 5 days, 31,000 would be a good breakup again if we got to close above that. But yeah, it comes into just technicals and just finding these chart levels. And it's amazing how a lot of people talk smack about technical analysis, but again, we can see how this level just is a level. I mean, no one's listening to me. I mean, maybe a few people are, but overall, this is big money kind of controlling this level here on a technical basis, and it shows right here. It's the even number of 30,000. So when you go from the 20s to the 30s, there's going to be some sort of factor where people who held all the way down to 15,700, there are people now that are getting back to these cycle levels that were major on the last cycle that are saying, all right, I'm getting a little nervous here. They're more likely to sell. There's also other people that bought at 15,700, 16,000, and now they're up a full 100%. And we know that even numbers tend psychologically to make people say, okay, listen, I'm up 100%. I'm going to sell and take some profits. So there's multiple psychological factors going on here, technical levels, psychological. And it is amazing to watch how the market has struggled at this 30,000, 31,000 level. The S&P 500, the obvious one would be the all-time high, right? If we just go up to that all-time high. But there are technical levels that on a psychological basis play out. And in fact, let me show my screen here, looking at the technicals of the S&P. And there's this trend line that has been major going all the way back to the COVID low. And what we can see here is on this first major downshift, we came right into it. And if I zoom in, you guys can see how it kind of played right there with that level, bounced off, came back, hit it again, then broke below it. And then look at how the underbelly of that level kept on hitting. And sure enough, right over here, we can clearly see that right there, that's where this market has run into pressure.
Bitcoin is stuck in a tug of war between bulls and bears. On one hand, it faces a strong resistance at $30,770, which, if broken, could open the door to $31,556. On the other hand, it trades below the 50 EMA, indicating a downward trend. The key level to watch is 30,500. If Bitcoin can stay above 31,000 for 5 days in a row, it could signal a bullish run. But right now, the market is sending mixed signals that might make investors wary. Why is $30,000 such a big deal? Well, it's a psychological barrier that affects how people behave. Some people who bought at higher prices and lost money might want to cut their losses and exit. Some people who bought at lower prices and made money might want to take profits and celebrate. That's why the market is struggling to move beyond this range. Let's get into the next clip, and of course, be sure to like this video and share.
Well, I think Bitcoin it's a little of both, right? So you have the AI narrative with stocks like NVIDIA and so many other companies. I mean, you could go back in a lot of the conference calls from last quarter and check how many times AI was mentioned, and there's a correlation to how high the stock has run based on how many times it was mentioned in the conference call. So there's a lot of things like that going on where you have the momentum driven. I do think there was a lot of money on the sidelines. Again, the light volume summer months are generally months that can be driven by the retail crowd. And so you're seeing a lot of money that was sitting on the sidelines come in. And I think on the other side, you have Bitcoin where, yes, we're starting to get some clarity for Bitcoin alone. We see Bitcoin dominance pushing up above that 50% level, and the BlackRock news, the Fidelity news on a spot ETF. So it's positive. It's just still kind of a question mark, you know. So I think that's where you're struggling on Bitcoin at this point. By the way, I also think that you have to look at the M2 money supply. You have to look at how much liquidity is in the market. Liquidity keeps dropping off in the entire system, not just the stock market. Stock market is one thing. People are still willing to chase, but M2 supply has really fallen down here. And there's a correlation between M2 and what risk assets do. You're seeing this kind of opening. And I know Ben Cowan and I have discussed this quite a bit in the no-shill zone. You have this M2 and stock market diverging. And what that does, folks, is it tells you that at some point that mouth has to snap shut, whether it's M2 rising to meet the market or the market's falling to meet M2. I can't find any big funds or big institutional money or major money that's buying altcoins right now. I can find ones that are buying Bitcoin. So that's the difference maker right there. And I still think Bitcoin dominance based on the chart. It's interesting because he uses different metrics than I, but both our metrics show Bitcoin dominance going to about 58%.
Bitcoin is holding on to $30,000 despite some sell-offs. The major discussion around the Bitcoin price has been largely due to the filing of the spot Bitcoin ETF by BlackRock and other financial giants last month. On-chain indicators have been showing strength for Bitcoin, with the shark and whale addresses accumulating in heavy quantities over the past few weeks. But Bitcoin is still volatile and anything can happen. There's also another thing to watch. The money supply is shrinking, but the stock market is rising. That's weird. It means that something has to change. Maybe the market will crash, or maybe money will shift. Now it's time for your thoughts. Will Bitcoin break 31k and go to 35k, or are you bearish on Bitcoin? And how will the Fed's move affect crypto? And more importantly, how will the Fed's decision affect the crypto markets in the future? Let me know your thoughts in the comment section below. And of course, don't forget to subscribe to my channel for more updates on crypto and the economy. Also, be sure to give a big thumbs up to this video. Thanks for watching, and we'll see you next time. Adios.